watching all these videos and gaining knowledge about the stock market, how should you start your investment journey in the stock market? So basically, always start small by taking baby steps into the stock market. That is by investing 5,000 rupees per month or any amount which you are capable of, and then slowly increase it over a period of time. Okay, and also start safe. That is by investing in all the blue chip large cap companies like Infosys, Reliance, TCS, Asian Paints, the big companies of India. Start safe by investing in these companies. Also invest for a longer term instead of a shorter term or intraday or 1 or 2 months. So investing in long term gives you a lot of safety. And also have a goal in your mind and have a target price. This will give you a lot of clarity when you invest in the stock market. Also, if you have time and knowledge and the interest to invest in the stock market directly, then you can directly invest into the shares. But if you don't have these things, then you can invest through mutual funds, which is also very good. Then the next thing is diversify your portfolio. Invest in various types of companies and various sectors. Okay, but invest in only those sectors which you understand. For example, if you don't understand anything about or don't have any knowledge about the pharma industry, then it's okay. You don't have to do compulsory investment in the pharma companies just because the pharma is rising or everybody is investing. Don't follow herd mentality. Invest in only those sectors which you understand and have good knowledge about. That is very important. So, and also do your own research and then invest. You can watch various videos, read lot of articles, but always do your own independent research and thinking, and then only invest in the shares. And one important thing which I want to tell you is always understand that sometimes you will make losses in the share market. Don't think that always you will make profits. That is impossible. There will be times wherein you make losses in the share market also, but only make that much of loss which you can afford to lose. Now that you have invested in the shares, what you should do after investing? Because the 50% game is buying and the balance 50% is about selling. Only when you sell the shares, you will get profits in your portfolio. So what you should be doing after investing is that have a goal or a target price in mind when you buy the shares. Okay, it can be even 3 months or 6 months or 3 years or 5 years also. When you have a goal and a target price, this will give you a lot of clarity to know when you have to exit that particular share. And the second thing is, don't buy and forget what you have bought. Okay, lot of people forget their portfolio, what they have bought, and they just don't have any track of it. Don't do like that. Track your portfolio at least once in a week or once in a month. Even if you track your portfolio on a daily basis, it will not take more than 10 to 15 minutes. Okay, even if you check on a daily basis. And also one thing is that if you have shares of big large cap company or good companies like Infosys, Reliance, TCS, then whenever the share price comes down, there is a dip, accumulate more shares during that particular dips. And the third thing is have a proper documentation. Okay, so create an Excel file which will have all the details of your investments, like when did you buy, what is the price, what is the quantity, company name, total value of investments. This will be very helpful for you to track your portfolio and your investments. Documentation is very, very important. And the next thing is cut your losses and move on. Sometimes there will be a situation that the share price goes totally down from what you have bought, and it takes a lot of time to recover back what has been lost. Okay, and that is the time you should exit and move on. For example, I had bought shares of Lupin some 3 years ago for 1,000 rupees and I bought 10 shares, 10,000 rupees. Around after 1 month, there was some bad news in the market about Lupin and the share price crashed to 800 rupees. Then I was waiting for almost 1 year for the price to come back to 1,000, but it never came. It came to 920 rupees after somewhere around 1 year from what I purchased, and at that time I didn't want to average the share price. So 920 rupees I sold the shares, 10 shares, 9,200 rupees, and invested that amount in Infosys. And the price of Infosys increased faster than that of Lupin. So there are situations when you should know when you should cut your losses and move on in life. Then the final thing which I want to tell you is be alert. Always be alert to what is happening in your surroundings and in the economy of the country and as well as the world. Okay, for example, if the price of dollar to INR increases, then it is a good time to buy IT stocks. Okay, and if there are changes in the crude oil price, then it is a good time to consider petroleum stocks. So like this, always be aware of your environment, economy, what is happening, and try to make the best use of opportunities. So I hope now you understood how you should start your investment journey in stock market and what you should do after your investments. Thank you.